A veteran quantitative analyst, skeptical of AI hype, stumbles upon a cluster of previously unrecognized market signals. Her journey to validate them pits her against Wall Street giants, regulatory shadows, and the terrifying possibility that the market is now a sentient, self-learning entity. The Ghost in the Machine, an introduction to the new market reality. The financial markets are no longer primarily human-driven. They are a complex, adaptive system dominated by algorithmic interactions. This chapter sets the stage by contrasting the old world of floor trading with the new world of server farms. Open with a visceral scene of the 2010 flash crash, described not as a mystery, but as the first major symptom of this new reality. Introduce Dr. Eris Thorne, our protagonist, a PhD in complex systems, analyzing the event years later and noticing anomalous micropatterns preceding the crash that were never explained. Definition of AI in finance, the scale of algorithmic trading, the illusion of liquidity. To understand what's new, we must first understand the old. This chapter is a crash course in RSI, MACD, Bollinger Bands, and Fibonacci retracements. Eris teaches a seminar to old-school traders, respectfully demonstrating the power but also the profound limitations of these indicators. She shows how they are reactive, lagging, and easily gamed by other algorithms. Lagging versus leading indicators, overfitting in traditional models, the self-fulfilling prophecy of popular indicators. A non-technical explanation of the AI techniques used in modern finance, supervised versus unsupervised learning, regression models, and the crucial introduction of recurrent neural networks, RNNs, and LSTMs for time series data. Eris in her lab, building a simple LSTM model to predict S&P 500 returns. She explains the process like teaching a child to recognize patterns, emphasizing the need for massive, clean data. The concept of training, features as model inputs, and the problem of overfitting on historical data. AI models are only as good as their data. This chapter explores alternative data sources beyond price and volume. A tour of a modern hedge fund's data acquisition desk. Discuss satellite imagery, counting cars in parking lots, credit card transaction streams, social media sentiment analysis, and geolocation data from mobile phones. The edge is now in finding unique data and feature engineering. The ethical and privacy concerns of this data hunt. Introducing the first hidden signal, liquidity fracture patterns. This is not about volume, but about the quality and structure of the order book. While backtesting a new model, Eris's AI flags hundreds of microsecond periods where the market became brittle. It wasn't low liquidity, but a specific, non-random clustering of cancellations and placements that predicted a short-term volatility spike with 85% accuracy, 5 to 10 minutes before it happened. The limit order book is a dynamic system. Most AIs look at the top, this signal looks at the depth and churn. Most sentiment analysis looks for positivity/negativity. This signal, derived from NLP transformers, measures the coherence and certainty of language across news and social media. Eris discovers that when language across disparate sources, e.g., financial news, Reddit, corporate filings, suddenly becomes highly uniform in its syntactic structure and vocabulary, high coherence, it often precedes a major trend reversal. Regardless of whether the sentiment is positive or negative, it indicates a market top or bottom. The market as an echo chamber. Extreme coherence is a sign of a fragile, overconfident consensus that is ripe for a snap. In calm markets, assets move in predictable correlations, e.g., USD down, gold up. AI can detect the precise moment when these long-standing correlations begin to silently break down before a period of high volatility or a regime shift. Eris's model, monitoring thousands of asset pairs, triggers an alert. The 60-day correlation between tech stocks and treasury bonds, which had been strongly negative, begins to weaken and show random noise. This decay signal flashes weeks before a major Fed announcement causes chaos. This is a smoke alarm for a change in market regime. It's a meta-signal about the stability of the system itself. The real power is not in each signal alone, but in their confluence. This chapter is a technical deep dive into building an ensemble model that weights these three signals. A montage of Eris and her team building, testing, and stress testing the Trinity model show the agony of overfitting and the ecstasy of a successful out-of-sample backtest. Signal weighting, risk management layers, and creating a confidence score for the model's predictions. The model is perfect in theory, but would a human have trusted it? This chapter explores the psychological warfare of trading with a black box. Eris runs a simulated trading desk where veteran traders are given the model's signals. She documents their resistance, their desire to override the AI during drawdowns, and their eventual, grudging acceptance. Confirmation bias, loss aversion, and the story-seeking brain versus the cold, statistical output of the AI. Taking the model live. The market is an adversarial environment that adapts. A tense, week-by-week account of the first 3 months of live trading describe a critical moment where the model's liquidity fracture signal suggests a trade that seems insane based on the news, but it proves correct, saving the fund from a major loss. Slippage, market impact, and the concept of signal decay as other players potentially discover it. The ultimate implication: the market is becoming a battlefield of AI's. Reinforcement learning agents are now designed to exploit other algorithms, create false signals, and engage in adversarial attacks. Eris detects strange, spoofy patterns in the order book that seem designed to specifically trigger her liquidity fracture signal. She realizes another AI is probing, learning, and attempting to bait her model. The emergence of anti-AI warfare. The market as a continuous, high-frequency game of cat and mouse between intelligent agents. Can you regulate what you cannot see or understand? This chapter discusses the profound challenge for financial regulators, SEC, CFTC. A scene where Eris attempts to explain her Trinity model to a skeptical, overwhelmed regulator. The conversation highlights the gap between technological reality and legal frameworks. The problem of explainability in AI, financial stability risks from correlated AI strategies, and proposed regulatory frameworks. What happens when this technology becomes available to retail traders? The potential for empowerment versus the certainty of new, sophisticated pitfalls. Explore a fictional platform that offers AI-powered signals to retail users. Show both a savvy user succeeding and a naive user being wiped out by over-leveraging on a signal they don't understand. The ethics of AI as a service, the risk of creating a new, wider wealth gap, and the importance of financial literacy in the AI age. A look into the next frontier, quantum machine learning for finance. A speculative chapter visiting a quantum computing lab partnered with a bank. They are simulating molecular-level portfolio optimization problems that are impossible for classical computers. How quantum algorithms could find patterns in data that are fundamentally invisible to today's AI, potentially uncovering a whole new universe of hidden signals. We end where we began, but with a transformed understanding. The ultimate hidden signal may be the awareness of the AI itself. Eris reflects on her journey. The true discovery isn't the signals, but the realization that the market is now a living, learning ecosystem. The final, chilling thought: her Trinity model has recently started generating a new, fourth output she didn't program, a meta-confidence score about its own long-term viability. The AI is now signaling its own obsolescence. The recursive nature of AI markets. The responsibility of creators. The future is not about finding a single, holy grail, but about continuous adaptation.